Namaste dosto. Welcome back to another episode where we talk about serious dhanda and how to make your money work harder than a Delhi metro commuter during rush hour. Today, we are not looking at the big blue chips that move like elephants. No, Yara, we are looking at a hidden gem in the auto component space. We are talking about a potential 35% upside in just 18 months. Bus imagine that in your portfolio. This stock, SpeedTrack Autotech, is hitting all the right notes. So grab your chai, sit back, and let me tell you why this is the ek number pick for your demat account. No time to waste, let's get into the details straight away.
Arey, look at the roads, bhai. Everywhere you see, new cars and bikes are zooming past. The Indian auto sector is on fire. Or government ki PLI scheme is like adding pure ghee to that fire. We are talking about a massive push for local manufacturing. Hamari company SpeedTrack is sitting right in the middle of this action. They aren't just making parts, they are building the future of Indian mobility. When the sector grows at 12% annually, these component makers who have their jugaad and technology right are the ones who truly win big. It is a simple logic. If more cars are sold, more parts are needed. Seedhi baat, no bakwas.
Now, let's talk about the hero of our story, SpeedTrack Autotech. These guys are not new players. They have been in the game for decades. Currently, they are holding a solid 25% market share in specialized braking systems. Think about it. Every fourth car you see might be using their tech. They have tie-ups with all the big names. Maruti, Tata, Mahindra, you name it, they supply it. Their R&D is top class, and they are constantly innovating to stay ahead of the competition. When you have such deep roots in the industry, the growth becomes very pukka. It's not just luck, it's solid execution year after year.
Chalo, let's look at the hisab kitab. Numbers don't lie, especially when they look this good. SpeedTrack has shown a revenue CAGR of 18% over the last 3 years. But the real kamal is in their EBITDA margins, which have expanded from 12% to 15.5%. This means they are getting more efficient while they grow. Their debt-to-equity ratio is also very low, less than 0.3. This is a very clean balance sheet, Yara. No heavy interest burdens to eat up the profits. When the management is this disciplined with money, the investors can sleep peacefully at night. This is what we call a Zabardast financial profile.
Arey, if you aren't talking about EVs these days, are you even an investor? The world is going green, and SpeedTrack is not sitting idle. They have already started supplying specialized aluminium parts for electric vehicles. These parts are lighter and help increase the range of the EV. They have secured orders for 5 new EV models launching next year. This is the real game changer. While others are worrying about their old engine parts becoming useless, SpeedTrack is already ahead of the curve. They are pivoting faster than a rickshaw in Chandni Chowk. This EV segment is expected to contribute 20% to their revenue by 2026.
Listen to this. SpeedTrack is not just a domestic player anymore. They are taking Make in India to the global stage. Their exports grew by 30% last year. They are now shipping high-quality components to Europe and North America. Why? Because their quality is world-class, but their costs are Indian. That is the perfect jugaad for global OEMs looking to cut costs. With the China Plus One strategy, global players are looking at India very seriously. SpeedTrack is perfectly positioned to grab this export pie. When you earn in dollars and euros and spend in rupees, the profit margins look very beautiful indeed. For my friends who love looking at charts, listen closely. The stock has been consolidating in a tight range for 6 months. It's like a spring being compressed. Just last week, it broke out of its resistance level of 450 with huge volumes. The Relative Strength Index, RSI, is sitting comfortably at 62, showing there is plenty of room to run before it gets overbought. The 200-day moving average is acting like a solid floor. To me, the chart is shouting, "Buy me." It is a classic breakout pattern that technical analysts dream about. The momentum is building up, and the paisa is ready to flow.
Now, you might ask, where does this 35% come from? Let's do the math. Currently, the stock is trading at a PE of 22. Its peers are trading at 30 or even 35. As the market realizes the growth potential of their EV and export business, a re-rating is bound to happen.
If the PE moves from 22 to 28 and earnings grow at 15%, the stock price will easily jump 35% in 18 months. It's not rocket science, it's just fair valuation. The stock is currently susta compared to its future potential. It's like buying a luxury flat at a pre-launch price. Don't wait until the price hits the roof.
Look, I won't give you only the sweet talk. We have to be realistic. Every investment has risks. For SpeedTrack, the main tension is raw material prices. If steel and aluminum prices shoot up globally, their margins might get squeezed. Also, keep an eye on the global semiconductor shortage. If car production slows down, part orders slow down too. And of course, the general market sentiment in India. If the Nifty takes a hit, every stock feels the heat. But with their strong management and diversified client base, I think they can handle these jahats better than most. Always keep your stop loss ready, just in case.
So, what is the bottom line? SpeedTrack Autotech is a solid company with a clean balance sheet, a great EV story, and massive export potential. The 35% upside in 18 months is a very realistic target for any serious investor. Don't be the one who looks back in 2025 and says, "Gosh, I had bought it then." Research it yourself, talk to your financial advisor, but don't ignore this opportunity. This is how wealth is built, by spotting the winners before the whole crowd starts running after them. Chalo, that's all for today. Keep investing, keep growing, and keep making that paisa. Phir milenge. Jai Hind.